in terms of equities. But before that, we take a look at how the markets are faring at this point in time, and we are seeing a little bit of resurgence after a very quiet start to the morning. And for now, the Nifty is advanced by around nearly 0.5%, trading near day's highs and comfortably above the mark of 21,300 for now. As far as the Sensex is concerned, again clawing back above 71,000. So it does seem like there are more and more traders out there which are in fact going ahead and placing bets towards longs at this point in time. Do remember that as we move into a truncated week, there's a likelihood that some of these positions will be booked well before we close, will trade today. But that said, we're going to have to wait and watch on that one. But to very quickly address as to what's really driving these markets as well, with respect to the key gainers and losers in today's day of trade, well, we do have the Nifty constituents, and to take a look at what's really, giving that impetus for the Nifty in terms of the constituents, well, we're most likely to have a lot of participation when it comes to something like an L&T, Tata Motors, Kotak Mahindra Bank, and Tata Steel. Or largely, these are some of those counters which are, in fact, aiding the index higher. But in terms of, the point contribution, it does seem like this time the gains are a lot more secular. It's not just a handful of names which are, in fact, providing the impetus to the Nifty advancing by 90-odd points. On the losing end, we do have a little bit of pressure when it comes to HDFC Bank along with Infi, but nothing much to speak for. Even if you consider the broader market indices, they are in fact doing well in today's day of trade. And even though we don't have too much to speak for when it comes to losers, I'll come to Gland Pharma specifically. Gland Pharma is up around nearly 6%. This is one of the top mid-cap 100 gainers. Gujarat Fluoro is the other one which has continued to climb over the course of the last few sessions. Now about 3,500 rupees per share. Just about a few days back, it was trading well below 3,200, and Piramal Enterprises is making a little bit of a reversal after 2 days of weakness. That's up as much as 4% as well. So some gains coming in there. And then, of course, we have Patanjali Foods, which is also advancing by around 3.6%. So keep an eye on that one. In terms of losers, we don't have too much. Polycab under a tad bit of pressure. That's down around 2%. But, all in all, it's had a great year, Polycab. And HPCL also under a tad bit of pressure. It's down around 1.5%, followed by Fortis Healthcare losing out just about 1.2%. That's as far as your cash markets are concerned. Let's take a look at what's happening in the futures and option space as well. I'm going to start off with the Nifty Index Futures. And that's where I reckon that we are seeing a little bit of change, maybe a little bit of an increase in OI of around 2%, even as the index advances by around 0.4%. So some longs being built in there on an intraday basis. And as far as the Bank Nifty is concerned, that is also once again looking at unwinding to the tune of around 1.3% in open interest. Even as the index in general remains flat, it's trying to move back towards 48,000, and we're just about 100 points away from there. So it's not really a big feat if it in fact does. But that said, we are seeing some gains there. Let's take a look at how the options market is stacking up. And as we were talking about earlier, we're expecting the Nifty to move within a 500-point range that would be numbered by the 21,000 put, which has the maximum open interest. And on the higher end, we're keeping an eye on the 21,500 call, which also has max OI. And I reckon a lot of traders at this point in time are perhaps betting on the Nifty to stay within that range through the course of the next 1 week. Naturally, given the fact that benchmarks have advanced right now, we're looking at a little bit more writing activity in today's day of trade as far as your Nifty goes. And of course, we continue to keep an eye on some of those counters. Remember that the mid-cap, the weekly options mid-cap expiry is today, because Monday is, of course, a holiday. And then, of course, as we move into Tuesday, we will also have the Fin Nifty expiry, which will also remain in focus. But on that note, let's get in our experts for today. We have Aamar Singh, Head Advisory of Angel One, as well as Vinay Rajani. He's a CMT and Senior Technicals and Derivatives Analyst at HDFC Securities. Gentlemen, good morning and thanks for joining us. Aamar, I start with you. Let's take your view on the benchmarks. How would you trade them?
I would say that overall we've been positive on the benchmark because we did see some sharp correction happening 2 days back. But again, the resilience of the markets and also what we've been seeing is that it's been across the board. The rally has been across the board, and also most of the technical indicators to a very great extent, they have been clearly displaying that this is a broad-based rally. And also what we witnessed over the last couple of weeks, which was a very positive signal, was that the large caps have started moving up, because earlier it was more of, if you looked at it, was more of the large mid cap and the small cap, but large caps, the IT sector, the pharma sector, these sectors has also started moving up significantly. So we've been bullish on the markets, and a couple of days back we did witness a sharp correction, but again that was a buying opportunity. However, having said that, I would say that if you look at the data points as far as Nifty is concerned, we've got the PCR currently at around 1.17. So clearly there are more puts in the system. So more of put writing that's happening. So that's more of bullish. If you look at the maximum OI concentration, so between 21,000 and 22,000, that's the range that is there. Technically, the markets continue to remain strong. As far as the IV is concerned, there's not much of a concern. So that's within very reasonable limits in spite of the between 12, 13. So that also clearly points out that markets are not very much concerned. So these are some positive factors. So we've been trading or advising trade from a long side.
Okay.
But yes, be prepared for volatility as well.
Right. So positionally, things are looking positive as far as Aamar goes. Vinay, good morning to you as well. Your view on the benchmarks?
Yeah, good morning, Agam, and thanks for having me on the show. So basically, Nifty has retraced almost 61.8% of the entire fall, which we started. We saw that from the 20th December high, that was 21,593, and the low was 20,976. So if you were to take 61.8% retracement, that comes to 21,360. So it is hovering around that level only. The best part of this market is the breadth of the market. Since yesterday, we have been witnessing that advanced decline ratio yesterday also were at the 2-month high. And if you were to look at the advanced decline ratio right now, it is at 6:1. So that is the best part of the market. Breadth is quite strong. And if strong breadth is there, then definitely benchmark indices will follow. That's what we think. And in yesterday's session, we saw short covering in the Nifty as well as in Bank Nifty. And FIs also saw some registered some short covering in Nifty and Bank Nifty. So that also suggests that after getting a panic selling, we have resumed the uptrend. And if you were to look at the FIs long to short ratio, that has reached to 2. So still 2 is not a overbought number. In the bull market, we may see this FIs long to short ratio reaching about 2.5, even above 3. So that is a comfortable level, and put call ratio is around 1 level. So that is also a comfort zone. So the way market moves, the way breadth is going on, the way sector rotation is going on, I think the overall trend remains positive. And we have been witnessing some call writing at 21,500 that may provide resistance for the short term. But overall, looking at the breadth, dips should be bought into. That's what I believe. And ultimately, market is headed for the higher levels. Ultimately, I'm expecting Nifty to reach a new all-time high. And Bank Nifty, in fact, is looking stronger than the Nifty because it has retraced more than 78.6% of the entire fall, which we saw from 19th December till yesterday. So overall, Bank Nifty is looking stronger on the charts. But yes, overall outlook, if you get a dip in the market in today's session because of the weekend, that would be a buying opportunities. And overall, I see strong support building in around 21,200 that can be kept as a stop loss in Nifty.
Okay, so Vinay, you gave us your your target and your for the Nifty, but can you take us through your Bank Nifty December futures strategy as well? I believe that you're buying it at around 48,000.
Yeah, sure. So Bank Nifty strategy would be buying a December future at 48,000, and the stop loss can be kept at 47,700, 300 rupees stop loss, and target can be kept at 48,400. In Nifty, my future levels would be December future around 21,380. You can buy 21,300 can be kept as a stop loss, and on the upside, 21,500 we can expect in the Nifty. So this is a trading strategy for December futures in Nifty and Bank Nifty.
Right. Okay. Before we move on with stocks, Aamar, you did briefly mention the IVs at the moment. Of course, we've seen IVs come off to a certain extent, but there is an expectation that the benchmarks will remain range bound through the course of the next 1 week. And I reckon a lot of traders will be tempted to perhaps sell straddles and strangles. At that point in time, would you perhaps, considering the current IVs, go ahead and be tempted to execute such a strategy?
Yeah, I would say that, see, what has happened is that if we look at the Wednesday movement, and that was a very, I would say, caught most off guard. And post that yesterday, I would say there was a bounce back. Today also, we are seeing an up move in Nifty. Despite all this movement, we are seeing the India VIX close to around 13.9, 14. So it's trading within a very narrow range. So 12, 14, that's a very comfortable range. The moment it starts trading above 16, 18, that means there's some concern in the market, and sustaining above that is more important. So breaching once a while is okay. So what I would say is that, there would be those who would be looking at writing straddles and strangles. So they are expecting. So you have to understand one thing, is that the high that Nifty made on Wednesday, that's going to act as a very important zone of resistance. So 21,600, 593 was a precise high. So 21,600 and yesterday's low. So that would be around 21,000 roughly. So this 21,000 on the downside and 21,600 on the upside, that's going to act as a very important zone. So those who are looking at doing strategies, they would be looking at these two levels, very important, because if we don't see a break above or below these levels, market could get in for some consolidation.
Okay. Well, stay with us, gentlemen. We'll slip into a short break, but on the other side, we talk about stocks and a lot more. Stay tuned in. Welcome back to the F&O Show. We will now talk about all the stocks which can be on our radars, but I'm going to quickly address the constituents of the Bank Nifty at the moment and see how F&O traction is panning out for some of them. So if you look at some of your gainers, of course, you do have a lot more happening in terms of some of your relatively smaller names like IDFC First and AU Small Finance and Bandhan Bank, mostly longs and short covering there. Axis Bank is advancing by around 0.2%, but we haven't seen too much traction. Otherwise, State Bank of India is the same. We are looking at a positive move, about 0.5%, which is not bad for a bank as size of that, but not too much to speak for otherwise. Now, in terms of some stocks which are under pressure at the moment, HDFC Bank, of course, which is down around 0.4%, but we are looking at a shorts build up to the tune of nearly 2% increase in open interest. And save for that, Kotak Mahindra Bank, which is advancing by 1% as we speak, and there is a little bit of a longs build up there to the tune of around 0.3%. So we'll be watching out for that one as well. And speaking of Kotak Mahindra Bank, let's talk about strategies. Vinay, I'll come to you. I believe this is one of your picks, Kotak Mahindra Bank, and the other one is Persistent Systems. Can you take us through them?
Yeah, so basically Kotak Mahindra Bank is looking strongest in the private banking space right now, and after long underperformance, it has started resuming its uptrend. So it is a fresh breakout. We can say there was some consolidation, and on 20th December we saw some selling in that counter, and it absorbed the supply and resumed the uptrend. So overall setup is good, and as you said, there has been some long build up in today's session, so that is going to support the stock like Kotak Bank. So Kotak Bank December future can be bought at 1873. Stop loss can be kept at 1850 for the trading, and on the upside we can see a target of 1910. The second pick, as you said, my pick would be from the IT space, which is the strongest IT stock and one of the outperformer in the recent market performance. So Persistent System is looking strong. So after some running correction, it bounced back in yesterday's session. It is showing some full follow-up buying also in today's session. So Persistent System December future can be bought around 7230. No doubt in last 10 minutes it has given a good rally. It has gone up by 70-80 rupees more from the recommended level. Can be bought here also, and with a stop loss of 7100. On the upside, I see a target of 7400. So Kotak Bank in December future and Persistent System December future would be my trading picks.
And Aamar, you have Nalco and Lotus Labs on your radar?
Yes, that's correct. So what I see is that Nalco has given a breakout. So earlier it was unable to breach the 105, 106 levels. Currently it's around 116. Also we are seeing a good up move in the commodity space as well as in metal stocks. So this is one stock one can definitely look at. So any pullback towards 115, 116, that's a buying opportunity with a stop loss of 109 and a target of 127 on the upside. And the second is from the pharma space, and that is Lotus Labs. What we are seeing in Lotus Labs is that the stock has been in for consolidation for quite some time. We did see the stock correct towards the 350 mark. Currently, it's around 414 odd levels. And also what we are seeing is that gradually over the last 2 to 3 weeks, there has been some significant quantity. So both on the delivery side as well as the volume side. So that shows that there is smart money moving into the stock, and also the stock is displaying some signs of an upside move. So any pullback in the stock towards 405, 407 levels, that can be a buying opportunity with a target of 443 and a stop loss of 383 in the short term.
Okay, there you have it. That's your view coming in for Lotus Labs. Well, on that note, I'm going to wish both our experts happy holidays. Thanks for joining in and taking us through your views on the markets. And with that, it's a wrap on this edition of the F&O Show. However, before we do so, we have spoken to Prashant Khemka, and he's told us a lot more about what he expects from markets going forward and all the sectors that he has found to be promising going forward. This is a slice of that conversation. Listen in.
I think the telltale signs that you're talking about, they're very much there. So if you compare, you've been in the market for long enough, so the environment is quite, it reminds you of 2017 time frame. That was the last time when SME IPOs were all listing at 100+% premiums and all, and also the huge fundraises and IPOs and all. That was last time. Small and mid caps had a very rampant year in 2017 as well. Before that, maybe you had to go to 2007 when the environment was very similar, 2006, 2007. Yeah, so I think we are definitely, if there is some kind of a trend line, we're definitely on the other side of trend line, other side of the average. Now, this can continue for, it's not clear whether you're in 05, 06, 07. The big rally started in March 03. Exactly 17 years later, the big rally started in March 20 from the COVID bottom. Yeah. So it's not necessary that this would go on till 25, which is 5 years. It's not necessary, but it can go on longer as well, could be shorter as well. So that's the difficult part about, it's like a party. You are enjoying the party so much. Already it's past the due time. Yes, at some point, as my boss would say, the cops would come, but nobody wants to leave because they are so enjoying the party, if you will. So it can go on for much longer, and you have to, tread cautiously, but you can't be out of it.
Yeah. The bullish argument might be more time is spent trying to wait for the correction than in the correction itself. So, are you of the belief, because it's difficult to time the top per se?
Impossible.
Right. So, are you cautious currently? Would you, given a choice on personal accounts or portfolios, sit on a bit of cash because of the exuberance currently, or are you still riding the party?
Yeah, certainly. So personally or for client accounts, I have never sat on cash. Over the several decades that personally I have invested in India or abroad in the US, so I've been fully invested at the top in 2000, at the top in 2008, at the top in 2017 and so on. But by the same token, I've also been fortunate to stay fully invested at the bottom in 2008 or 2009 actually. In the bottom in 2003 and the bottoms that have come through. So I'm firmly of the opinion, what you said often my team members or clients when they say it is very difficult to time or call the top or the bottom, I correct to say that it is not very difficult, it is impossible. Because something that is very difficult, it can be done. It's just very difficult. But calling the market is like calling a coin, a coin flip. And the odds are similar. You'll be right half the time, wrong half the time. And the amount of time you sit out is the return that you will lose if you were to aggregate over time. So we stay fully invested at all times, and so is the case right now as well.
Well, the coin flip argument of Prashant is similar to his argument when talking about macro. That Prashant usually says that trying to figure out the call on the markets using macro is like a coin flip as well. So I just remember that conversation that we've had in the past. Okay, so so it may be a stated policy, or you following that policy that you do not try to time the market, which is fine. But would you believe that the probability of the near term market performance being a bit more sedate is higher, or do you reckon that this uptick that we're seeing, the probability is higher for the markets to inch up higher from where we are currently?
So I think it's reasonable to expect, see, the safest thing to say is that volatility would be higher. That's what all experts say, because that makes them sound smart. Yeah. So after a strong rally that we've seen over the last 12 months, it is unreasonable to extrapolate that we'll have similar returns, particularly in some of the smaller cap segments of the market. They'll have similar returns going forward as well. I think what's reasonable, at any point in time, it's reasonable, I think, from the Indian markets to expect a low double-digit return from the market. And same across large, mid, small in aggregate. In aggregate, markets are quite efficient. So the rally we've seen of about 20-odd% in the overall market and 40-odd% in mid and small, that could be very well justified if economic growth were to continue leading the world at this 7-8-odd%. Remember, in 03 to 07-08 time frame, the earnings growth at aggregate market levels were 25%, and mid and small cap earnings growth were far higher than that. If I recollect correctly, were closer to 40%.